Bingo, bango, bongo, man, we're rocking and rolling here. There's amazing things going on in the market right now. And of course, this is the most amazing thing of all. But let's get right into these markets here. Number one, look at what happened there on Friday. Holy moly. We had a lot of shaking and baking going on here. One of the things is that you can see that the market accelerated in the early part of the week, Tuesday, Wednesday, Thursday, pop up following that super bullish purple predictor. Look at the heavy volume down at the bottom of the day. That was the highest volume we've had, really, well, gosh, since at least June. And it was on that high move. Then the market had the big plunge-o-rama on Friday and then closed just barely down. That's actually very bullish price action. The market took a beating based on news, turns around, and rallies back up to a higher level. That's very impressive price action, very impressive price action. Let's go on to our next one, Dow Jones. Obviously, similar situation. I'm not showing the volume here, but purple predictor is leading the market higher, and the close on trading was pretty good. Nasdaq, a little limpier. Notice that let me go back over here, but here we had made an all-time new high on the Dow on Thursday, but over here on the Nasdaq, it was Tuesday we made the all-time high, so it was a little bit earlier in the session, but still reasonably good price action. Now, seasonality, after the incredible breakout that we had a couple of weeks ago, we've been on a bull signal. And once again, here we saw new all-time highs on Thursday, Friday the plunge-o-rama, and closes just down a little teeny bit. No big deal. So I'm still putting seasonality in a bullish posture, which means that we've got to have double size positions going on right now. That's what we've got to do when it's seasonally bullish. Double up your trades. Our seasonal pattern here is still bullish all the way. You can see there's maybe some dip in the middle of January, and then we take off to the races again. But we'll talk about January's seasonality later. The yield curve is right up there. You can see it's still bullish here for a couple more weeks, and then it doesn't turn quite so bullish. Asset allocation, though, moved to a new all-time high. Not an all-time high. I don't know if it's an all-time high, but a new one-year high, that's for sure. And we can see that that's very bullish because it means there's a lot of capital coming into the market, that the market isn't going up just on the capital that was already in it. In other words, it's the same number of buyers and sellers, just that the buyers are getting more aggressive. No, what we're seeing here is that new money is coming into the marketplace. Our stock market risk indicator still remains muted, but it's starting to perk up as well, so that's bullish as well. Our global shares, look, I like it if all the shares are going up, so I'm happy with that. Bonds, whoa, holy moly. As the stock market plunged, the bond market took off. Remember that bonds are a flight to quality. They're kind of a safe haven. People go to them if they're worried about the stock market. But notice they didn't close near the lows like the stocks closed near the high. No, they closed in the middle of the session, middle of the trading range. So we're going to have to see how this all shakes out. Bond indicators remain mixed. The dollar remains under pressure. This is something we've been talking about now for several weeks. After we saw some breaks of heavy heavy technical support, we got bearish on the dollar. I look for the dollar to remain under pressure. Gold, this is disturbing to me. Gold should be stronger, and it's not. And when a market is weak in the face of bullish fundamentals, that's actually bearish. So something's going on here in the gold market. I'm going to do a little bit more research this week and report back to you next week. Our gold indicators also kind of a mix. Now, the one at the bottom is the one that disturbs me the most because the yen had been leading this strongly upward, but the yen kind of crapped out here in the last week, and that's kind of knocked the underpinnings out from under the gold market. Oil, As I say, I'm getting more bullish on this. Did a lot of research, and I am getting much more bullish, and I think we can get up into the mid-60s on the oil market. All right, that was a pretty quick one. There wasn't a lot to say because it's really, except for Friday's Shakerama, it was pretty much a repeat of the previous week. So we have to remain bullish right now. Seasonality is firmly in place. Not too much to worry about here until we get into January. This should be an excellent time for us to be long the market. Of course, freebies, love having you here. But of course, you don't really want to be a freebie. You want to be a fully paid up member. That's so much better. Anyway, all right, everybody. Thank you, freebies. Fully paid up members. Hang in there just a second.